Did you know there's a secret number that controls your life? It decides the interest you pay on loans, whether you can rent your dream apartment, and sometimes it can even affect your job prospects. This number is your credit score. If yours isn't where you want it to be, don't worry. Today, we're going to break down exactly how to understand it and, more importantly, how to fix it. Welcome back to our channel, your guide on the path to financial independence. This is the 10th episode in our 30-part series, and we're still focused on the foundations. Why? Because without mastering these basics, building real wealth is just a dream. Today, we read tackling something that can either save you thousands or cost you a fortune, your credit. Think of it as your financial report card. Lenders, landlords, and even some employers look at it to see how responsible you are with money. But what exactly are they looking at? First step is payment history. This is the big one, making up about 35% of your score. Have you paid your bills on time? Every single late payment can leave a scar on your report for up to 7 years. It's like a test where being on time is the most important question. Next, we have credit utilization, which is about 30% of your score. This sounds complicated, but it's simple. It's how much of your available credit you're using. Let's say you have a credit card with a $10,000 limit and you have a $5,000 balance. Your utilization is 50%. A high utilization tells lenders you might be stretched too thin, making you look risky. What do you think is a good percentage to stay under? We'll reveal the magic number later. Then there's the length of your credit history, which accounts for about 15%. Lenders love to see a long, stable history of managing credit responsibly. The longer your accounts have been open and in good standing, the better. This is why closing your oldest credit card can sometimes hurt your score, even if you don't use it anymore. After that, we have your credit mix, making up about 10% of your score. Lenders like to see that you can handle different types of credit, like credit cards, a car loan, and maybe a mortgage. It shows you're a versatile borrower. It's not the most critical factor, but having a healthy mix can give your score a nice little boost. Finally, new credit inquiries make up the last 10%. Every time you apply for a new credit card or loan, it creates a hard inquiry on your report. Too many of these in a short period can make you look desperate for credit, which is a red flag for lenders. It signals that you might be in financial trouble. So, how do you see what lenders see? You need to check your credit report. And here's some great news. You are legally entitled to get a free copy of your credit report from each of the 3 major credit bureaus, Equifax, Experian, and TransUnion every single year. You can get them from the official site Annual Credit Report. There are no strings attached. When you get that report, you need to become a detective. What are you looking for? First, look for errors. A recent study found that 1 in 5 people have an error on their credit report. That's a huge number. These mistakes could be as simple as a misspelled name or as serious as an account that doesn't even belong to you. These errors could be dragging your score down without you even knowing it. Next, check for outdated information. Negative items like late payments or accounts and collections are supposed to fall off your report after about 7 years. Sometimes they stick around longer than they should. Make sure old debts that should be gone are actually gone. Also, look closely at your payment history. Do you see a late payment listed for an account you know you paid on time? It happens. A simple clerical error by your lender could be costing you points on your credit score. You need to find it and dispute it. And the most terrifying thing to look for is fraudulent activity. Do you see accounts you never opened? Or inquiries from companies you've never contacted? This is a major sign of identity theft. Someone could be using your good name to rack up debt, destroying your credit in the process. This is why checking your report regularly is not just a good financial habit, it's a critical security measure. If you find anything wrong, you need to dispute it with the credit bureau immediately. They are legally required to investigate your claim. Now for the part you've been waiting for. How do you actually improve your score? If your score is lower than you'd like, don't feel discouraged. You have the power to change it. Let's walk through the steps. The single most important thing you can do is pay all your bills on time. Every single time. If you struggle to remember, set up automatic payments for at least the minimum amount due. This one habit alone will have the biggest positive impact on your score over time. It shows lenders you are reliable. Remember we talked about credit utilization? The magic number you want to stay under is 30%. So if you have a $10,000 limit, try to keep your balance below $3,000. But if you really want to impress lenders and boost your score faster, aim for under 10%. That means keeping your balance below $1,000 on that same card. Low utilization tells lenders you're in control of your spending. Here's a tip that might seem strange. Don't close your old credit cards, especially your oldest one. Even if you don't use it, that account is helping your score by increasing the average age of your credit history. Closing it can actually make your score drop. Just put it in a safe place, maybe use it for a tiny purchase once every 6 months to keep it active, and let it work its magic. Be strategic about applying for new credit. Each application creates a hard inquiry, which can temporarily lower your score by a few points. If you're planning to apply for a major loan like a mortgage, avoid applying for any new credit cards in the months leading up to it. Space out your applications to minimize the impact. But what if you have a very thin credit file or a poor history? How do you start building or rebuilding? A great option is a secure credit card. With a secured card, you make a cash deposit, and that deposit usually becomes your credit limit. You use it like a regular credit card, and your payments are reported to the credit bureaus. After a year of responsible use, many companies will upgrade you to an unsecured card and refund your deposit. Another option is a credit builder loan, which is designed specifically to help you build credit. Does this stuff actually work? Let me share a real example. Imagine someone named Alex. A year and a half ago, Alex had a credit score of 580. That's considered poor credit. Getting a loan was tough and interest rates were incredibly high. Alex decided to take control. First, Alex got a copy of all 3 credit reports and found a few errors, including a late payment that was incorrectly reported. Alex disputed them and got them removed. Then, Alex focused on paying down high-balance credit cards, getting the overall utilization from 80% down to around 20%. To make sure a payment was never missed again, Alex set up automatic payments for all bills. It wasn't an overnight fix. It took consistent effort over 12 to 18 months. But today, Alex's credit score is 720. That's a jump of 140 points, moving from poor to good credit. This change means saving thousands of dollars in interest on a future car loan or mortgage. It's life-changing. This isn't just a story, it's a blueprint. You can do this too. A strong credit score is more than just a number. It's a key that unlocks financial opportunities. It can save you thousands, even tens of thousands of dollars over your lifetime and lower interest payments. It gives you freedom and options. Taking control of your credit is one of the most powerful steps you can take on your journey to financial independence. It takes patience and discipline, but the reward is a future with more financial security and less stress. Start today by getting your free credit report. It's your financial health checkup. Thanks for watching. If you found this helpful, make sure to like, subscribe, and hit that notification bell so you don't miss the next episode in our series. We're here to help you build the financial future you deserve. See you next time.